The GameStop mania continues, and shares are up now over 40% and now about 46% as Roaring Kitty, also known as Keith Gill, announced that he'll be having a YouTube live stream tomorrow. And he also has not sold his June 21st calls. The fact that he hasn't sold these calls yet and he still has them, he's up about $300 million on his position. And it seems like he has about $500 million between the options position and the shares he bought for GameStop. If GameStop hits $69, Keith Gill, also known as Roaring Kitty, could be a billionaire. And short sellers and hedge funds are now down $1.1 billion today betting against GameStop. Look, in my opinion, I'm not investing in GameStop because I personally don't see the fundamental value in the company. I don't see necessarily growth, but that doesn't necessarily mean that Keith Gill posting or Roaring Kitty posting on Twitter or Reddit is necessarily wrong either. He's not really, it doesn't seem like he has any insider knowledge. He just disclosed his position. That's not unlike hedge funds disclosing their positions. And members of Congress buy stocks and trade stocks and companies before legislation and bills are proposed. So if they could do that, I don't see why Keith Gill and Roaring Kitty should be banned. I don't see why he can't do that. Yes, it might be a little bit risky for E-Trade in terms of the volatility of GameStop, but that doesn't mean that what Roaring Kitty is doing is necessarily wrong. It's not their fault that Keith Gill has such a big following on social media. Look, when Warren Buffett discloses he has a stake in certain positions, stocks do jump, maybe not as much as Roaring Kitty saying he'll have a live stream tomorrow in terms of GameStop. But when Warren Buffett discloses a new position, at least in the past, stocks did jump after that. So it's not that much different than that. Keith Gill just has a big following, and it's on social media. And with social media memes, it magnifies that. And then the ECB, European Central Bank, cut their key interest rate by 25 basis points a day after Canada cut their key interest rate by 25 basis points. So central banks around the world are starting to cut rates. It looks like where the futures traders in the U.S. are pricing in 2 rate cuts this year, most likely being in September, but there could be a chance for July. So there's more central banks are cutting rates. That's good for liquidity, and that easier money policy and money printing should be good for the market. And then tomorrow we have the May jobs and unemployment report number. And if it comes out lower than expected in terms of job gains, or if the unemployment rate shoots up and hits 4% or higher, that increases the odds of a Federal Reserve rate cut, in my opinion, pushing it back earlier. We already had the ADP payroll report coming out weaker than expected, and the JOLTS job opening report earlier this week showed lower job openings than expected. So if those reports indicate something for the job market, it'll most likely mean that the jobs report numbers tomorrow are weaker than estimated, if accurate at least. So if it is weaker than estimated, then increased odds of Federal Reserve rate cut in July. I don't think there'll be a rate cut in June. I think the central bank will leave rates unchanged for June. But tomorrow is huge in terms of whether or not there could be a rate cut in July, in my opinion. So let's tune in tomorrow's job and unemployment report number at 8:30 a.m.